We originally had assumed that we would see a relatively easy year for US China tensions on the assumption that Trump would not want to damage economic growth or the stock market in the run up to the elections themselves. It's still an open question, or more of a question now that we're seeing a bit more of a blame game arriving. But even with that in mind, the fact that we are seeing these conflicting reports does suggest that maybe we don't see necessarily the worst of it this year, but you could never rule it out. And I think that's something where the markets will have a very tough time swinging between the what ifs and the actual news flow as it comes out and the actions that may or may not be taken. It should also be seen in the context, though, of Europe, which is also becoming, you can see, more protectionist, talking about having a manufacturing sovereignty effectively within the European Union or certain countries in the European Union. There are more questions out there about the length of supply chains being too long and the concentration risk that has been exposed by this outbreak this year being too great. And this is pushing in the direction of going from just-in-time type manufacturing with long, complicated and concentrated risk supply chains to something that could be closer to the just-in-case supply chains, which is less efficient but safer.
Now it seems like as countries get more protectionist, there is going to be a spillover impact of that as well on supply chain disruptions and thereby impacting the economy as a double whammy.
That's right. There's actually multiple factors that we're watching for, even when we think through scenarios of how the recovery from the worst point, and we do still believe the worst point is right now, when we will be seeing better numbers as economies open up, almost by definition. But what will the pace of that improvement look like over the subsequent months after the openings up and we see some gradual lifting of restrictions? Well, one, you've got the supply chain issue. Absolutely right to focus on that. You also need to focus on the fact that consumers are quite likely to end up being higher on their precautionary savings, knowing their lives, their livelihoods have been put so much more at risk, and they feel that sense of insecurity. That means more precautionary savings. On top of that, businesses knowing that and knowing their own vulnerabilities and the risks of even some of their supply chain partners being impacted negatively by the negative cash flow situation they've been stuck with, you have an extra drag on investment from businesses. And then if you throw in the fact that we know that these enormous stimulus measures from countries around the world will ultimately need to be paid for or eventually reversed, that could weigh on the recovery as well. So you've got multiple factors, but this one on protectionism, this de-globalization story, was actually one of our original parts of the story we were thinking of even before COVID-19. It's just accelerated that process, whether it's the demographic drag, de-globalization, or indeed this drag that you're seeing all around the world from just this weaker growth outlook. It's going to be tougher.